Today is Friday, February 12th. I want to take a look at some key sectors in the market. I call them the Four Horsemen. Everybody has their own definition of what the Four Horsemen are, but for me it is financials, home building, retail, technology. I have a little wrinkle on technology lately, but we'll get to that in a minute. So what we have on the screen here is the financial ETF, the XLF ETF, and you can see in candle format, what the trend is. This is that mini flash crash nonsense last summer, but the trend is down. It's taken out any reasonable levels that we've seen in this thing. But if you see yesterday, which was Thursday, there was a gap down, left a spinning top candle or even a doji candle, and jumped back up today. Why? Well, JP Morgan announced a share buyback, or should I say the CEO announced his own personal share buyback, and that put a little fire under the financials. We also had a little rebound in oil after some OPEC jawboning yesterday, but these are all short-term events. If you look at this trend, it is clearly to the downside. Underneath we have price relative. This is the price of the XLF versus the S&P 500. Call it relative strength, call it relative performance, and you can see what the trend is there. Was it oversold yesterday? Possibly, but trend is still down here. So from the relative point of view, financials are not helping the market at all. Moving on to home building. This is the ITB ETF. Same story. The trend is down. Took out last summer's closing lows. Really not looking too good at all. The trend clearly to the downside relative to the market and in an absolute sense. Retail. The XRT ETF. Now it looks like it may have stabilized somewhat, although it's still making some lower lows here, lower highs relative to the S&P 500. It still, obviously, you can see what the trend is here. Let's put a quick trend line in. Why not? See what happens. A lot of ground to make up, and you can see some sort of elevated trend here. Should I say accelerated, not elevated trend, accelerating to the downside. This is possibly a double bottom. How will we know? Well, we could throw some other indicators up real quick. I don't want to spend too much time on those. This is just your basic 14-bar RSI. I don't see a whole lot of reason to think it's a double bottom just yet, just because these things never got oversold. So it's just a weak ETF. But of course, you always got to watch out. You can't have a fixed opinion. That doesn't change. So possibly double bottom here, but the trend is still down. Certainly not outperforming the market, so not a good sign. And finally, tech. This is the XLK ETF. And I got to get rid of those. I don't know why those are still there. Now here we see the tech ETF more or less outperforming the market. The trend possibly has broken on the performance chart. You could argue that's a broken trend. I don't know if this is a good trend line. So actually, let's just get rid of that one. Basically, it's been flat for the last couple of months relative to the market. Now, it's not outperforming the market. It's just not falling compared to the market like the other ETFs were. However, what is the makeup of the XLK ETF? It's your FANG stocks, your Google, Apple, which of course isn't helping, Netflix, Amazon. All these stocks were killing it up until very recently when they fell apart. So I want to take that factor out of the equation. I want to look at a more equally weighted tech ETF, index. This is the old Pacific High Tech ETF, now called the NYSE ARCA High Tech ETF. And you can see the picture and the relative performance is a very different one. This thing is set a new low this week actually. So technology as an entire sector to me is still lagging the market. So the bottom line here is all four of my key sectors are lagging the market, are doing worse than the market. So when that happens, you just can't be bullish.